When we first warned about Canada's inevitable housing collapse, in September 2023, the message was simple. Canada's housing market was not just overheated, it was structurally fragile. The risks were visible, the incentives were distorted, and the consequences were being delayed rather than avoided. Yet those warnings were drowned out by reassurances from industry groups, optimistic forecasts, and media narratives that insisted prices would rebound and affordability concerns were exaggerated. As we revisit our warnings now, in January 2026, it stands as a record of what was already knowable long before today's reality set in. The goal isn't to claim prophecy, it's to demonstrate how predictable outcomes emerge when incentives, policy choices, and financial conditions are ignored for too long. You were warned in 2023. This is what many Canadians were never told.
The Great Canadian Housing Bubble. What they didn't tell you. Are you ready for the crash? Vanishing wealth. How Canada's housing bubble will rob you blind. Canada's real estate market has witnessed an unprecedented housing bubble that has sent shockwaves through the economy. The culmination of various factors has led to soaring house prices, making homeownership an elusive dream for many Canadians. In this video, we will delve into the underlying reasons behind this historic housing bubble, its implications, and the possible beneficiaries. In the reference video by Debacle Economics published on September 1, 2023, the author explains that over the past 2 decades, Canada's housing market has experienced an astonishing 375% increase in house prices, making it one of the most unaffordable housing markets globally. Key factors driving this bubble include low interest rates, foreign investment, domestic speculation, the impact of COVID-19, supply shortages, and government policies. The video highlights that the genesis of this colossal housing bubble can be traced back to the aftermath of the U.S. housing market crash during the Great Financial Crisis. Canada responded by reducing interest rates to rock-bottom levels, granting buyers unprecedented purchasing power. This move had a profound impact on housing prices, propelling them to meteoric heights. Foreign investors, particularly from China, played a significant role in fueling the housing frenzy. Major cities like Toronto and Vancouver became attractive destinations for foreign investors looking to safeguard their wealth. Additionally, Canada's lax regulations made it a prime location for money laundering through real estate transactions. Domestic speculation also contributed to the soaring prices, as Canadians diverted their funds from traditional investments into multiple properties for rental income. This influx of domestic investors greatly added to the affordability crisis for prospective homeowners. The onset of the COVID-19 pandemic further exacerbated the housing market turmoil, as the Bank of Canada responded by reducing interest rates to historic lows. This led to a surge in buyers eager to capitalize on low borrowing costs, further inflating housing prices. Beneath the housing bubble lies a severe shortage of homes relative to the population, a surprising challenge for a vast country like Canada. Canada's housing supply is the lowest among G7 countries, with a deficit of 1.8 million homes needed to reach the levels seen in countries like the United States and Britain. Government policies and regulations have played a significant role in shaping Canada's housing market. While the government historically subsidized housing for low-income families, reduced housing subsidies in the 1990s and increased development charges by municipal governments shifted the landscape. Additionally, restrictions on urban sprawl and opposition to infill development further constrained housing options. The demand for single-family homes persisted, leading to skyrocketing prices as construction dwindled. Existing homeowners benefited from this trend, while aspiring homebuyers faced mounting challenges. The recent increase in mortgage rates over the past year has triggered concerns of a housing market crash. Unlike the United States, where mortgages typically last 30 years, Canadian mortgages have shorter terms of 3 to 5 years. This means Canadians may face higher interest rates when renewing their mortgages, putting significant pressure on household finances. Another layer of complexity is added by the housing bubble in China, where government efforts to stabilize the economy have resulted in defaults by major developers. This has implications for the Canadian housing market, as many Chinese buyers divest their properties due to government restrictions on overseas real estate ownership. The referenced video concludes that Canada's housing bubble is on the brink of bursting, with house prices showing signs of a significant correction. This raises concerns for existing homeowners who may see declining equity in the real estate industry, which may need to adapt to a more restrained market. Financial institutions that profited from increased lending activities could also face challenges. The Canadian government faces the challenging task of balancing financial stability, addressing affordability issues, and mitigating the risk of a housing market crash. Policymakers must carefully design measures to promote a healthy and sustainable housing market while avoiding abrupt disruptions. In summary, the video discusses the causes and implications of Canada's housing bubble, emphasizing the need for prudent housing policies, transparent data collection, and proactive regulatory oversight. The fate of Canada's housing market will continue to shape its citizens' financial well-being and the overall health of its economy, making it a closely watched and high-stakes situation. The previous information inevitably leads to the question: why was the Canadian housing bubble allowed to develop and expand to such a detrimental size? And who really benefited from this bubble? The unchecked growth of the Canadian housing bubble and who benefited from it is a complex issue with multiple contributing factors. While it's challenging to pinpoint a single cause, several key factors shed light on why the Canadian government allowed the housing bubble to expand and who profited from it. Economic stimulus and political pressure. During the aftermath of the Great Financial Crisis in 2008, the Canadian government, led by various political parties over the years, sought to stimulate economic growth. Lowering interest rates was one tool to achieve this goal. The Bank of Canada, Canada's central bank, reduced interest rates to historic lows, which initially helped stabilize the economy. This monetary policy had the unintended consequence of inflating housing prices, creating an environment where homeownership seemed attainable to many. Political popularity. High home prices have traditionally been associated with positive economic indicators, leading to political popularity. Canadian governments, both at the federal and provincial levels, often used the housing market as a symbol of economic prosperity. As such, there was a reluctance to implement stricter regulations that might slow down the housing market, fearing it would negatively impact their approval ratings. Economic growth and tax revenue. The housing market's rapid growth led to significant economic benefits, not only in terms of construction and real estate-related industries but also through increased property taxes and land transfer taxes. Governments at various levels benefited from the additional revenue generated by a booming housing market. These revenues were often used to fund essential public services, making it politically challenging to rein in the housing bubble. Influence of lobby groups. Real estate and construction industries have significant lobbying power in Canada. These industries actively advocated for policies that favored continued housing market growth. This influence over policymakers played a role in preventing more stringent regulations that might have curtailed the housing bubble. Global investment. Foreign investment, especially from China, played a crucial role in driving up Canadian housing prices. Chinese investors sought safe havens for their wealth, and Canada's open real estate market was an attractive destination. Many of these investors purchased properties for investment purposes, driving up demand and prices. Restricting foreign investment was politically sensitive, and policymakers were cautious about imposing measures that could dampen foreign investment. Fear of a housing crash. Canadian policymakers may have been wary of introducing regulations that could burst the housing bubble abruptly. A sudden housing crash could have had dire consequences for the broader economy, potentially leading to widespread foreclosures, financial instability, and job losses. The government's fear of a housing market crash might have led to a preference for gradual cooling measures. Lack of comprehensive data. Inadequate data and transparency in the housing market made it challenging for the government to gauge the extent of the bubble and its risks accurately. Without comprehensive data, policymakers might have been hesitant to intervene decisively. Who benefited? Existing homeowners. The most apparent beneficiaries of the housing bubble were existing homeowners who watched the value of their properties soar. Many homeowners leveraged their newfound equity to access additional credit, further contributing to rising prices. Real estate industry. Real estate agents, developers, construction companies, and related sectors profited from the housing market's boom. High demand for new construction and property transactions translated into robust business growth. Mortgage lenders. Banks and financial institutions enjoyed increased mortgage origination and refinancing activities during the housing bubble. The surge in lending contributed to their profitability. Government. Governments at all levels benefited from increased tax revenue generated by higher property values and real estate transactions. These funds were vital for funding public services. Speculators and investors. Speculators and investors, both domestic and foreign, capitalized on the housing market's upward trajectory, buying properties for short-term gains and rental income. In summary, the unchecked growth of the Canadian housing bubble resulted from a combination of economic, political, and market factors. The government's hesitancy to intervene more aggressively was influenced by a desire to maintain economic growth, political popularity, and tax revenue. While many parties benefited from the housing bubble, it has also created significant affordability challenges and poses potential risks to Canada's economy in the event of a market correction. What do you think? Should Canada's housing market bubble have been allowed to get out of hand as it has? Why was foreign money, much of which may have illicit origins, allowed to enter the Canadian housing market unchecked and drive up home prices to dizzying heights? Please join in on the conversation by leaving a comment. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.